All right, ladies and gentlemen, we are live. We're recording. Welcome back to the Rob Review. Your friend in success here, live doing an educational webinar and on TV for the first time in a long time. Those of you that are on my list, you know we've been kind of diving into doing more of these. The underaccreditedinvestor.com is where you can find this stuff. And I try to do one of these on a regular weekly basis, and I put it up on the website and I keep it up there until I do another one. What we're talking about today is for the TV audience because it was a question that I was posed a while back, and it made me think about how much this education is needed out there, because a lot of people feel like you have to have millions of dollars in a portfolio to get to a place where you're able to live off that money for a consistent period of time. And the truth is with the right strategies, that's just not the case. And today we're talking about the 5% formula to freedom. And you can really do it with 3%. But my target for my account of this particular strategy is 5% a month, because 5% a month on as little as a few $100,000 can produce monthly change in income. It might not totally knock out your need for other sources of income, but it can be a source of income that knocks out, say, the worry about a mortgage or a car payment or $1,000 to $2,000 a month that you use for groceries and going out to eat and phone bills, and just that's life-changing money, right? And that's what the Rob Review is about leveling the playing field for all of us that are not at the top 1%. Now, the stock market as we know it, the reason that we want to utilize it is because the stock market is a place that builds wealth. Bottom line, you look at these top 3 people and you can't see them because of me in the way, so I'll do it this way. The powerful wealth that's built in the stock market, chopping it up any time and place, going all the way back to 1900. I do it in 10-year periods. You look at the wealth that's built from the stock market, generational wealth. The Walton family, you can see now, this is just one of the Waltons, one of the largest shareholders in Walmart. This is 2 generations now, multi-billionaires. Is it because they have some huge income source? Well, yeah, Walmart, but it's also more importantly, and Elon Musk is known for this, he's not wealthy because of his stock. He's wealthy because of his stock portfolio, not because of his income as a CEO of Tesla. Larry Ellison, the same way. He's had multiple companies. Some of them have gone bankrupt, but the wealth that he has generated in his lifetime comes from ownership in publicly traded companies that fluctuates on any given daily basis. Walmart, Tesla especially, because I traded, it's a highly volatile stock, and other companies. I mean, there's 20 people on the Forbes list that I could name that have ownership in publicly traded companies, or that have been publicly traded at one time and went private. They made fortunes, not because of the money in the bank, but because of the shares they own. And they can utilize them in multiple ways to liquidate if they want to. But the thing is, options was created. Options in the stock market were created for wealthy people to leverage what they already own, protect what they already own, and to create income from what they already own without selling them. They're a vehicle for that. And once you realize that, it changes the game of the risk of what you're utilizing, especially when you buy the underlying security. Now, these guys, they're wealthy because of the shares that they own, and they can sit there, and if they need money for something, they can borrow against them. If they need money for something, they can sell calls. They can protect their downside with puts if they know the company is going through a hard time. There's just so many strategies, but today we're going to talk about a specific one. To build the level of wealth starting from zero, you either start a company or you buy into a company that's already existing. And for you and I, the best way to do that is a publicly traded vehicle. Starting a company is very risky. I don't know how many of you out there are owners in private companies, but a large portion of them fail. And the reason most of them fail is not because the ideas don't work. It's because they're undercapitalized and over-leveraged, and they eventually get to a point where they cannot sustain because they cannot keep up with the changes in their particular avenue. So companies, owning them, being the owner of them, is not necessarily the best way to create wealth. Now, creating a business or an income stream through selling products can generate money that you can then use to put capital to work in the stock market, to capitalize your stock market business. That is what I suggest a lot of people don't look at, but should look at for a place to start in the stock market. Not using your current income, but going and finding a place that you can look for to start another income stream, and then using that money to capitalize your stock market business, and then buying with the profits from the stock market publicly traded companies, because that's where huge wealth is eventually built over time. Because when you put your money in with these wealthy men, right here, when you put your money in with these wealthy men, you are not betting on them because they don't need you. They want to succeed. And you're putting your money in a place where, with the success of the management team of that business, with the success of a business that is capitalized well, because most companies that are listed are mid to large size companies, your risk level is mitigated because they're going to succeed. And by virtue of them succeeding, your money succeeds and grows. So what I'm talking about here is building a stock market business. See, those models work, and the proven success is right before your eyes. I'll just take two particular funds that a lot of people know about. The Templeton Fund, the Buffetts of the world, okay? $10,000 became $2 million over a period from 1954 to 1992 in the Templeton Fund, by the way of John Templeton's investment strategies, which were very, very similar, but a little bit different than Buffett's strategies in the Berkshire Hathaway Fund from 65 to 2000, which was compounded at 23.6% annually, which, of course, for all of you out there that own mutual funds that kind of track the market, it killed your 11% or whatever it was. And that's because owning specific companies will trump diversification over 500 plus companies any day of the week. The reality of it is that a lot of people don't think that they can invest like Buffett or Templeton. They think that they're somebody special. And so why try? Why not invest with them? Well, it's hard to do because a lot of those guys, once they get really successful, their funds become highly expensive, or you're just not around. I mean, to invest with Templeton, you would have had to have been born back then, and I was not, right? But you can glean from them how they invest. And then you can do the same thing they do by building a stock market business that very much mimics how they built theirs. And I'll show you, to get to a place where 5% a month is available to you, it just takes a strategy that's been proven time and time again to work. The idea here is to build a stock market business that, once funded, continually moves money from risky to very little risk in long-term assets. And it's a continuous movement of money. See, this is what these wealthy guys do. If you look at the biggest companies out there that build stock market businesses, they all find themselves in a place where I would love to be able to, there we go, in a place where they can invest the way they want to invest without risking capital that they need to live their life. And that's what you want to do, but you don't want to go out there and start a fund because your goal is really not to make everybody wealthy. Mine is, but maybe that's not your goal. Maybe your goal is just to build generational wealth for your family. So you want to build a stock market business that grows on its own volition, but is separate and outside of the income you need to live. And that's where this idea comes in. It's a 3-bucket strategy. These buckets were kind of pointed out to me the other day when I was talking to a guy that I'm going in partnership with, and he realized that, dude, these 3 buckets is how you look at the stock market, and he's right. So the stock market is about 3 different accounts, in my opinion, minimum. 3 different strategies in those accounts. An aggressive strategy to exponentially grow your money that's really targeted at that 5 to 20% a month threshold. Another income strategy in a separate account that allows you to pull money out of eventually to better your life, to do what we were talking about earlier, paying a mortgage, that kind of thing. And then the biggest bucket eventually will be and become the long-term wealth building bucket, which is what Buffett and Templeton and other investors have done. They have managed to fully fund that bucket, invest the money, and then generate returns from those investments that continually fund that bucket, so they always have capital on hand to buy more investments when the time comes for them to buy. They can take advantage of the things that you and I can't because they are capital heavy, waiting for the market to become too heavily bought. And then it becomes that sickly prey that's easy to pounce on, that wounded deer that is always going to be the easier target than the healthy buck that's going to put up a fight for the predator. And in the market, whether you want to be that or not, if you want to be successful, you've got to become the predator. And so for a lot of these investors, their business model is some form of this. They may not always do the aggressive trading strategies, but they do the other 2. And the reason they don't have to do the aggressive strategies is because their money is generated from owning capital intensive or businesses that generate the capital that allow them to invest. What I'm talking about is like Warren Buffett with his insurance companies, or Templeton with a fund that pulled in a lot of money from you and I that worked and wrote him a check and said, here, invest my money. And so he drew a pool of that and always had money to invest in the different entities that he wanted to buy. So for you and I to create that, I believe we need to trade. And we need to trade money that we don't really care about losing. And now that for a lot of people is a hard thing to grasp. That's why you don't use your income to trade. I recommend that everyone out there figure out a way, whether it's getting another job. For most of you, it's probably not getting another job because you're already a very busy professional. For most of you, it's starting a new income stream that generates however much money it does, but that has the potential to build up to $3,000 a month in income that you do not need. And you can then put into that first bucket strategy, that aggressive bucket. That aggressive bucket is not necessary to the people that already have a lot of capital. But to those of you that don't, that aggressive bucket will give you an edge over everyone else, because that aggressive bucket, when traded, and let's say you continue to add $3,000 a month to it over time, compounding what's in that trading account by 5% a month. And now you're going to have losses, but I can't really do a formula based upon losses. That's very difficult for me to do. You move. That's why I'm doing such a low return strategy. You move a third of everything that you profit from in that trading account to the second bucket, and then eventually to the third bucket. And what you do is you eventually get to a place in a very short period of time, my math, about 7 years, where you have $1 million in that second bucket. If you left it all in the first bucket, there's a large percentage chance that you're going to lose it all, because you can get to a place very quickly where you risk more than you need to. And anytime your capital is aggressively being traded, it's at risk of going to zero in the wrong trade, because it's all about your mental and emotional state. That's why you want to move a piece of it out of harm's way. With the trading strategies out there, you find you one that works. You can get your money to a place where 5% a month becomes right regular. And you don't ever need that $3,000 to grow huge to compound it in the other account if you're moving a third of the profit. 5% of $3,000 is $150. Not a lot of money. But in the next month, $6,000, the next month, you build up to a point where maybe there's $10,000, $20,000 in that trading account. Well, 5% of that is a generous amount of money. You know, I mean, $500,000 every trade, moving a third of that compounds. Okay. And then this income generation account. Well, those strategies are way less risky, because there you're just going to, what I like to do is buy stock that is setting up to grow because the company looks like it's going to grow. But it's not an investment, because you're not worried whether the stock is going to grow over the long term, 7-10 years. What you're worried about is over a year or two. Because what you're going to do with that money is generate income. And that's where the 5% a month really comes in. Because yes, $1 million is a lot of money. And 5% of $1 million is $50,000. And $50,000 a month is a huge sum of money. But as you stair step your way, you're going to see that $100,000, $200,000, $300,000 to most retirement accounts is not a lot. But to an account that's generating 5% a month is life-changing every month. It starts to come in by doing small option strategies on stock you already own, because you're buying it and you're holding it and you're generating the income. And then over time, the stock will either sell itself off by your options, like if you do a covered call and you get called out, or you'll sell the stock off because you don't need it anymore, and you'll generate an income from that, and you have to pay taxes on that capital gains. But the income from, let's say, $200,000, okay, that 10%, yes, but even 5%, that's 10 grand. Okay, even 3%, right? So $300,000 account, generating 5% on that. That's $15,000. The same thing with the 100, man. Most of you, if you took your current income, your gross income, and multiplied it by 20. So a lot of you would find that $100,000 or even $80,000 would be your figure. And then you generate 5% a month on that. 80,000, 5% a month, that's $4,000. Your income is replaced. So back to that $3,000 a month figure. If $3,000 a month covers your car payments and your mortgage, and how much do you need for that, right? You need 60 grand in an income account, and you have forever changed your financial future. And $60,000, $1 million sounds like a lot of money, but 60,000 sounds really achievable, doesn't it? Especially if you have, backtracking, an income stream that's generating 3 grand a month that you don't need, and you're putting into the stock market, and you're making 5, 10, 20% a month in the trading bucket. And then over here, you got your income bucket. And so what it eventually looks like is you have bucket 1 that's aggressively trading. And then you have your bucket 2. Those are terrible looking buckets. And every month you're moving a third of your money to it. And every month, and it's growing and growing and growing and growing. You can see where it could get to be even 30,000 over 2 or 3 years. And then you're generating 5% on that. That's $1,500 a month. 60,000. Because you're not touching the principal balance of the account. So these are constantly growing by way of this. Or say 1 month you generate 6%, but you only need 5%. Well, that 1% goes back into the principal amount of that second income generation bucket. That's where this stuff gets really, really powerful. Because once you have a small sum, you're starting to see the results. Everything else gets put on steroids because you work harder. Now, some of you out there are thinking, okay, if I can take my time and generate $3,000 a month in income on a side project, why the heck do I care about any of the stock market stuff? I'll tell you why. There's nothing you're going to do out there that's residual enough that you're not going to have to do more work the next month to keep it going. Unless you're investing the money in something like the stock market. That is the same amount of work every single month because it's the click of a darn mouse. $3,000 stake that is produced by a source separate from your income, then instead of just putting it into a savings account, you're putting it into the stock market. It will change things. I have worked this out multiple different ways, and I have always come down to the $1,500 and the $3,000 a month figures are one simple produced in most cases, by a separate income stream in your business. 2, it's a life-changing amount of money for a majority of Americans. 3, it gives you leverage in most options trades, because a lot of stuff out there right now costs $3 and $6 to buy into on the ask. That's why that $3,000 figure is used. It's not arbitrary. So the outcome idea here, ladies and gentlemen, after 84 months, that's 7 years, if your $3,000 a month account is grown at 5% a month, and you continually add $3,000 into it by way of some kind of side income project, your final balance is $3 million. Was 3,700,000 plus. Total contributed factor is only $252,000. So you've made $252,000 in this side income project, but you've grown it to $3 million. Your total investment gains are $3,400,000. So the $3,000,004 plus the $252 gives you the $3,700. And I won't even tell you what the number is. You go type in 3.7 million times 5% in your calculator. If you did $3 million, and you can do it, buying stock, it's it'll get eaten up. You buy some good quality stock. You sell covered calls on that, which we talk about at length in other videos. Earn that 5% a month. How could you live? I'll end with this. The Undercredited Investor 5-minute read, 5% goal a month. Our goal, my team's goal, is to achieve your financial goals 5% faster. That's the whole idea here. You can go to theundercreditedinvestor.com. QR code goes there. I've got a whole new website. Just got it updated. Pretty proud of it. Look, you don't need a lot of money. You don't need $3 million to change your life. I just like to show you big numbers because I want you to understand the compounding of the stock market and why traditional ideas are just, well, a lot of them are total crap. And what's spoken out there is really spoken to keep you needing stuff that you really don't need to get to where you want to go. I'm your friend of success. We'll be back for another one. Until then, until next time, keep in mind and remember, I am here to help you. All right, I'm here to help you succeed. And what I'm going to do is see if I can't get my views and opinions thing up here, because that's important. Yeah. There we go. Just remember, we'll close with that. There's my my disclaimer. But I'm your friend of success, Robert Morris, and I'm here to help you. We'll see you on the next one.